Good afternoon, this is Sean Golding with Golding and Golding, here to discuss the basics of what happens from a tax perspective, not a life perspective, when a U.S. person marries a non-resident alien, okay, and they decide to file a joint tax return. So in order to determine who is a non-resident alien, NRA, let's see who is a U.S. person, okay. U.S. person means U.S. citizen, lawful permanent resident, aka green card holder, foreign national who meets the substantial presence test. If you don't fall into any of those categories, you're considered a non-resident alien. So what's the difference, right? Well, if you're a non-resident alien, you only get taxed on your U.S. sourced income, right? Unless you're filing joint, which we'll get to, but you get taxed on your U.S. sourced income. So you live outside of the U.S., you have some investments in the U.S., you're not a U.S. person, you may have to submit a W-8BEN. If you're in a treaty country, then you can include any provision of the treaty that may eliminate or reduce tax withholding, and sometimes you file a 1040-NR. When a non-resident alien marries a U.S. person and they file together, oftentimes the immediate reaction is, hey, let's file a tax return joint. It will reduce the overall tax liability. If you're single and you're making a couple $100,000 a year, you're going to get taxed different than if you are filing joint. Typically, it will significantly reduce your tax liability, subject to the marriage penalty tax and 8960 and all that kind of stuff, okay? But one thing that comes as a shock or a surprise oftentimes for the non-resident is they're supposed to include their worldwide income on the tax return as well. Why? Because they filed a joint tax return with a U.S. person. So it's the return that's being submitted. It's a joint return. So the joint return has to include all of the income from both parties. Now, another ingredient to keep in mind is that when you first do it, you're supposed to make certain elections. It's commonplace for people not to make the election. We here have never seen anyone really penalized on it or anything like that. The IRS is getting usually more taxes because when they file joint, the non-resident alien also has income, but not a big deal. You can always go back and fix that if necessary. So what are some important considerations if you're a U.S. person and you're filing a joint tax return with a non-resident alien? Well, one of the first things to keep in mind is that you can still apply the foreign tax credits and foreign earned income exclusion. So, and the foreign income exclusion can each be claimed by both spouses can claim it, but you can't double up on the housing exclusion and things like that. So you can still apply foreign tax credits. So if the non-resident alien earns a lot of money but paid a lot of tax overseas, then they may have sufficient foreign tax credits to offset any U.S. taxes on that. Where it gets tricky is the foreign asset disclosure. So with the tax return and you're filing joint, then you typically have to report your assets, foreign assets, on a host of different international information reporting forms, Form 8938, 3520A, 5471, 8865, et cetera, et cetera. Okay. There's exceptions, exclusions, and limitations, but for the most part, it's included because you're filing a joint return. But one common question we get is, well, what about the FBAR? Well, technically, the FBAR is not a tax form, right? It falls under Title 31, Money and Finance. It doesn't fall under Title 26, Internal Revenue Code. So the mere fact that someone makes an election to be treated as a U.S. person for tax purposes so that a non-resident alien and U.S. person file a joint 1040 together does not necessarily translate into the non-resident alien having to file an FBAR, something to discuss with whichever certified specialist you work with, but it doesn't necessarily automatically mean the FBAR has to be filed. If you're out of compliance, if you've been filing maybe and you haven't been doing it properly, haven't been including the foreign income or assets, etc., there's various disclosure programs you can use to safely get into compliance. Try to steer away from all the horrible fear-mongering you'll find online about if you're applying for citizenship or your green card or conditional green card, et cetera, et cetera. There's various programs. There's the voluntary disclosure program, which is for people who are willful, who can't certify under penalty of perjury that they're non-willful. Otherwise, there's things like the streamlined program and reasonable cause or delinquency procedures. We have lots of free information available on our main website. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding and Golding. Thank you for your time. Enjoy the rest of your day.